Hello and welcome to Premier Study in Investing. It's great to have you. Thanks for stopping by. So we're going to be looking at this book here, Hijacking Bitcoin. I'll put it on the screen. I just want to share with you some of my thoughts, why it was very convincing on a certain number of levels. I'm going to give you some highlights and why I've actually decided to no longer invest in Bitcoin, but wanted to talk you through what I found. Okay, so you can see the book here on the screen, Hijacking Bitcoin, The Hidden History of BTC by Roger Ver and Steve Patterson. So if you go to the Solari Report on YouTube, I was subscribed to them. Catherine Austin, I think Fitz is her last name, interviews the co-author, so Steve Patterson. And Steve is articulate, and he's convincing, and he does a nice job. Enough that I went and bought the book. So how many podcasts do you see where it's so good that you decide you're going to go ahead and spend, $15, $20 and get a book? Well, this one was. So I would recommend starting there. So go to Solari Report. What is it? Hour and 47 minutes. So hour 50. So it's pretty long. You can get a lot of free information just off of that. And then he said that you can, I think the guy's already made a lot of money on Bitcoin, and so he's not so worried about making additional money through the book sales. He said that, he's more interested in the technology, and he always has been, and so he knows that there are PDF versions of this book that you can find online that have already been created, and so you can probably find it for free if, you live maybe in a place where the book isn't available, or you just don't have the means, or if you're in a developing country, or, whatever your circumstances in life, just, you can't do it. So I don't think you have to feel bad about that. Roger Ver, basically, he was known as the Bitcoin Jesus, okay? And he became the Bitcoin Judas. And that is because he turned his back on Bitcoin as a project. Now, he was apparently in on this very, very early on, and so made a lot of money. He said he's donated over $1 million for projects because he really believed in the freedom aspect of it, the ability to, I don't even think that he's a lot on, trying to escape fiat devaluation or inflation, same idea, right? But just that you could get out of having to be reliant upon banks that fail, banks that have high costs, banks that maybe are manipulatable, banks that have various interests, right? Primarily serving their shareholders, right? Maybe more so than their customers. And so for those reasons, I think he presents himself as someone that believes in the technology and has for a long time. And even kind of, I think this whole thing got started out of the 2007, 2008 banking crisis in the United States, which had ripple effects throughout the global economy. And so the idea was perhaps, and you'll hear that more now as U.S. Debt has risen quite dramatically, and we're adding $1 trillion like we hear all the time in servicing costs a year just on debt that it's not going to be repayable, and you hear all these scary things. So for whatever reason, people are interested in this. They are interested in it. Maybe it's the number go up theory, where we've seen in the last 6 weeks we've been as high as $107,000 here. This is March of 2025, and then in the last week we've seen it under 80,000, 79,000. We got the Trump tariffs going on right now, and new administration, Doge is auditing everybody. They're cutting jobs. They're slashing budgets for USAID, and so it's kind of a wild time. But one thing I like to do is look at the table of contents. So Roger breaks his book down into 3 parts. The first part is fairly clear and very educational for new people like myself. Right? I had friends that have kind of got me into crypto, and I put some money in there, and I think one of the principles that is really, really good, especially after looking a lot into biotech during the pandemic, right, is this: we should understand what we're buying. I think this is, I don't know if this is an idea, it seems like something that Warren Buffett believes in, or something that he would say, but it seems to make sense. How can you be putting a lot of your life savings into a technology or a sector that you don't understand? So, we could do chips. What the heck is the difference between 7 millimeter and is it 7 nanometer and 5 nanometer? And who has been able to do that? And why is Intel bad? And their stock price is collapsing. Is TSCM, Taiwan Semiconductor, so much better? Are they really the best in the world? If you can't understand the technology, it's like how I shouldn't have a major stake in that, right? Because I don't understand that. I also fell into that during the pandemic, right? Okay, you have this global supply chain disruption. It's something, let's say $30 trillion of disruption, economic disruption. And so whoever can figure out how to solve that problem is going to make a lot of money. Yeah, but it's really hard to understand gain of function. It's hard to understand mechanism of action, even for people that have microbiology backgrounds. It was very difficult. They can come up with an idea of why something might work, but you get what I'm saying. Nobody knows if it works or not until you run the trials. And then you unveil the data and you put out the press release and everybody knows. Well, biopharma is crazy volatile like that because it all depends upon whether it's good or not on the outcome. So this was the same type of thing for me. How can I be a big Bitcoin investor? I don't even understand the basics of it. So one thing that Roger does in this book is he starts to lay out for us some of the big things. He starts with the original vision of Bitcoin, which I think he does a convincing job, is that it was never meant to be a store of wealth, right? You just buy some and you never spend it, and you just stick it away and number go up and you somehow get rich because you're early on, and the adoption will come, and so the sooner the better type of mentality, right? He makes it very clear that was not the intention. He makes it clear that it was always the idea that this was going to be for daily transactions, for commercial use, same as like a debit card, Visa transactions, and that you could hold your own money, and that you didn't need to do it, you didn't need to hold your money at a bank and have Visa take their piece, that you could just, it would be money, it would be daily money. Well, nowhere I've gone in my entire life has it been daily money, right? And this thing came out in 2010, maybe a little bit sooner. So it's like, okay, well, that was almost 15 years ago. Like, and no one anywhere accepts it as a payment system. So you can see right there why the title, Hijacking Bitcoin. And he goes on to make really his point that we've deviated so far from the original design that the Bitcoin that we have today is not the Bitcoin that we wanted. And so he actually goes into what he thinks are alternatives, which is why he became the Bitcoin Judas, is now his new nickname. He used to be an evangelist for Bitcoin. He's not anymore. He basically has thrown all his weight behind Bitcoin Cash. He says he's not a single coiner. He believes in a multi-coin investing strategy, but he is mostly interested in technologies that give people freedom, where they don't have to be worried about banking collapses the next time or whatever, right? Okay, so some of the big things that he draws, and that I remember myself before and after reading this book. Before, I thought, this is a thing. Bitcoin is a thing, it's fixed, and somehow it exists. It's an online commodity. It has fixed features, and I realized that was all wrong. This is nothing more than code. So it's just lines of code, and behind lines of code are people, developers, and then in this situation, you have this core set of developers that are able to make certain changes. You have a set of miners that are kind of have to agree to the terms because miners want to get paid. Also, developers want to get paid. That leads us into some problems as far as how do these people get paid? What are the fees? And essentially, one of the big things that he gets into is small block versus big block. Maybe you've never heard of this. I've never heard of this. But essentially, Roger doesn't like small block, because small block means that you put an artificial cap on the size of each block that moves through the system, right? And so basically think of it, each block can do so many transactions. That's how I understand it, right? And so move through the system. You got to move them through the system. Well, the smaller they are, that means the less capacity you have. As it stands today, and what Roger doesn't like is we're stuck in this small block world. And the small block world is two bad things. One, it's slow, and two, it has high fees, so it's expensive. So you might ask yourself, why would anyone choose that system? Why would you want a slow, expensive thing if you could have a fast, cheap thing? Well, we basically ended up with a slow, expensive thing because it favors certain people. Is it the miners? I guess. Is it the developers? Yes. That's the world we live in. And so he lays that out for us. And it can be changed. The code could be changed to make it from a small block world to a big block world, meaning fast and cheap. And I don't know about you, but if you ever remember those early trades or transactions that you did in crypto, once you hit send, it was like pure agony until it was received on the other end, right? Because you didn't really know, like, does this really work? And maybe you just did like a small $20 test transaction first. But even if you did that small test, you know what I'm saying? Do you know that feeling where you're like, what is this freaking website thing? Is this going to work? Does this work? And it works, and but like, he talks about in 2017 that the fees went up over $500 for a single transaction. And what they'd like to have is they've said 5 cents a transaction is exorbitant. There's no way it should be 5 cents a transaction. It should be under a penny. So almost free, but at certain times, $500. And during the worst times, as the system started to increase in popularity, and I'm talking like 2017, right? Which, how many of us were talking about, Bitcoin in 2017? Like practically nobody, right? Well, even before all of us were talking about it, it got so bogged down in the system that it would take like a day, 24 hours for your transaction to go through using the small block system. Well, obviously that's not going to work. Some of the other things they get into is potential fraud, and they talk about how some of the current ideas have been, in order to fix this small block problem, since it seems like the core developers do not want to deviate and go from small block to big block, and they talked about it, and they had conferences, and all these Bitcoiners thought, hey, we're actually going to start scaling this thing up, we're going to increase it just like the white papers. And it's been clear to me and clear to Roger why he wrote this book, it's like, they're never going to change. They're just going to make empty promises. There's no will to change the block size. He gets into talk about how a lot of the forums, Reddit as well, had people that would come in and censor a lot of the talk, that would kick people out. That it was just a wild, chaotic thing after a certain point. Once this block size debate started, that it's even been theorized that, well, maybe it's big bankers that got in to become these anonymous admins for these chat groups, Reddit or wherever else. Because obviously the whole thing is quite threatening to commercial banking and legacy banking and the fees and all that stuff, that they get a hold of our money and all that, and we don't get a hold of our money privately. So is it believable that, insiders from the banking industry, sent their people in and got them and, kind of captured it, hijacked it? Seems reasonable to me. I don't find that unreasonable. There's some talk about nodes and a lot of other things related to computing power, and just some of the insider chat that's been going on about why Bitcoin can't work, and then like the opposing view of like, well, we could do this to fix it, so let's do that, and then there's been pushback. The other thing that was really interesting is that once it became clear that this is just code, and that you have developers that wrote the code and then kind of gatekeep it and decide whether it should be changed or not, that it is changeable, and that B, that these are people, meaning that these are people like this guy Andreessen came on early on and managed the project and then left, and then he had a successor, and then that person left, and then you have another person with different personalities, different visions, different ideas about what it should be, or whatever, and that it's not just a lead person. You also have a team of whoever these core developers are that are incentivized in different ways or whatever, and that it's not like it's not like something like a piece of gold or an ounce of uranium in that sense. It's not like a dollar where it's different like that. And so that's one of the really, really interesting things, is to realize all it is code, and the code is dependent upon people, and the people are influenced by society, and it's not as fixed as you'd like to think it would be. So the second and third part of the book are, like, I would say chaotic, not in his writing style and it's not in his ability to describe things, but the things that he is describing are really crazy. Lightning networks, liquid networks, basically keeping the small block size and building on a secondary layer, where now you have these like secondary organizations. So you have more organizations involved. Each transaction has to pass through like more layers of software, more people touch it. You have probably everyone takes their piece at each step along the way. All the middlemen, take a piece. You have to have more updates, more compatibility problems. You have additional, in his view, it doesn't work. More security problems. You have potential to rip people off, or you need to develop these like towers that they call, that are kind of like systems of self-audit, that if there was like something like a double payment that occurred, that there is some way for people to like see that, and that there be some way to refund the money. I mean, a lot of weird issues like this that you start to see that there are chinks in the armor. But beyond that, is just, it drives home the idea that this probably will not become eCash. It will not be suitable for daily transactions. So, I mean, that I would say that's the gist of what I got out of it. As a new person, trying to understand, what is this? Is this investable for me? Maybe I should educate myself, because you hear a lot of podcasters. You hear, what's that guy's name? I like him, Raul. You hear guys like, let's just go through the people that come to mind that are really pro Bitcoin. So I'll just put these people's names in. So TFTC, these guys, they're obviously like hedge funders. They're VC. They describe themselves as VC related to. So this gentleman here, he runs the podcast, and he's also involved in VC for Bitcoin, for different, I don't know, secondary or some type of building out the network, right, and sort of software development and service companies. You have this guy. I can't remember his last name. Yeah, Raul Paul. Super interesting guy. He has this pretty interesting stuff about, like, don't F this up. He talks a lot about the problems with fiat. And, I mean, you can see these really big numbers, 2.6 million per coin. And, and he's on big podcasts. Who else comes to mind? So Whitney Webb, we've seen her come on, and she'll say stuff like, Bitcoin is the only real coin. Everything else is a shit coin. So she and Mark Goodwin, they talk a lot about Epstein and, basically CBDCs, private-public partnerships between big tech and government, funding, all types of great work, super interesting work. But so she's in favor of Bitcoin. All those folks are. And so also Arthur Hayes, big proponent of Bitcoin. And then you have the guy over at MicroStrategy, Saylor, right? So you have a lot of people that are like, this is the coin, this is the one, get this, don't miss the window, and this is your opportunity to get in while you can get in on this big tech. It'll be the future. It'll be the future of banking. It's the revolution. It's, But then you have the people. So you can see that, based on this one report, but Catherine Austin Fitts, she does not, she's not a proponent of BTC. So Patterson and Ver, at least Patterson has switched over, and he talks about it too. So Roger Ver also talks about Bitcoin Cash as being the thing that they're really into. So I don't know. I'm just sharing what I found with you, and let me know if you have books on this topic or interviews that you felt were especially enlightening and helpful, because it's something that I'd like to understand better, and this was a good start for me. Thanks so much. We'll talk to you next time. By the way, as always, we have if you're interested in becoming a buy and hold investor, we have a couple different products. We have a full course where you can pick any asset that you want and put it into the model. It's what they teach in graduate school. It's called Modern Portfolio Theory. It'll teach you how to do it, take the prices, get a hold of those, transform them into returns, do some data analysis on that in order to be able to look for some volatility in the assets as they are correlated with one another, in order to find sort of the best risk-benefit trade-offs that you can find given on the possible assets that you put into the model. It's pretty neat. Also, just do a simplified version of that and put it on Patreon each quarter. I think that's about it. I've been looking a lot at this Moderna story. It's super fascinating to me. There's been a lot of volatility, so I've been looking at that as more something to trade. And that's all for now. I'll be doing another book on the age of AI, something that I purchased based on a Whitney Webb interview. So thanks for joining me. We'll talk to you next time. Bye.